Hello everyone, I am Stephen Lind, your English language specialist. Today we move from the physical movement of goods to the analytical world of presenting financial data and market trends. In international trade, numbers tell the story of an organization's health. We move from cargo to capital and from movement to measurement. This matters because leadership conversations are often financial conversations. Even when the topic is logistics or operations, the leadership question is usually, what did it cost us? What did we gain? And what should we do next? My goal today is to help you interpret and discuss economic numbers with strategic clarity, so your briefings are confident, concise, and decision-ready. As always, this is a bilingual module. These slides include voiceover supported by AI for Arabic audio. We strive for accuracy, and I appreciate your patience with any minor errors. Let's connect today's topic to our previous unit. Last unit focused on logistics, the operational pavement, timelines, routes, ports, and delivery. This week, we focus on outcomes, performance, profitability, and strategic impact. Logistics moves the goods. Finance measures whether that movement created value. And every shipment, route, and contract has a financial footprint that leadership watches closely. If we misinterpret a chart, we can misread priorities. A misread chart can create budget bottlenecks, where approvals stall, resources freeze, and plans lose momentum. A quick tip for those of you who use charts and data visuals regularly. Anytime you create a visualization, it should do one or more of these three things. First, it makes the data clearer and easier to access. Second, it shows a relationship in the data, like a comparison or a trend. Third, it tells a story. If a chart does none of those, you may not need a visualization. That is a deeper topic for another day. Now let's return to our financial terms. Let's build a foundation with three core terms. The first is revenue. Revenue is the total income generated by business activity before expenses are deducted. It shows the scale of activity flowing into the organization. And remember, high revenue does not always mean high profit. It only tells you how much money came in. The second term is expenditure. Expenditure is the total money your organization spends to operate, including staffing, fuel, infrastructure, and vendor payments. In a suit briefing, the goal is not only to list costs, the goal is to explain what kind of costs they are. Some costs are fixed, meaning they stay stable even if volume changes. Other costs are variable, meaning they change based on activity, like fuel or transport rates. The third term is the fiscal year. A fiscal year is the 12-month period used for financial reporting, and it may not match the calendar year. Different countries and industries use different start dates. So when you present numbers, always confirm which fiscal year and which quarter the data represents. Now we add vocabulary for describing market forces. The first is fluctuation. Fluctuation means frequent and irregular change in prices, interest rates, or exchange rates. The second is inflation. Inflation is the rate at which prices rise over time, reducing purchasing power. In practical terms, the same expenditure budget may buy fewer goods and services than it bought last year. The third term is forecasting. Forecasting is predicting future trends based on current and historical data. Forecasting is not about certainty. It is about preparedness and better strategic decisions. When you present charts, the words you choose signal your fluency in the suit register. If a number rises quickly, you can describe a surge. A surge is a strong, sudden upward movement. If numbers drop suddenly and sharply, we say they plummet. To plummet means to fall at high speed. And if numbers stabilize after movement, we call that a plateau. A plateau is a period of little or no change after growth or decline. These terms help you describe trends precisely, not just with up and down. In the suit register, numbers alone are never enough. Leadership needs context, cause, and consequence. First is executive insight. Executive insight means you explain what the data means for the mission and for the decision ahead. Second is actionable data. Actionable data is information that helps leadership choose a direction. When you see an increase, identify whether it is temporary, structural, or avoidable. Now let's hear what this sounds like in a real briefing. For example, imagine you are briefing leadership on a quarterly update. You might say, "This quarter, our revenue increased by 8%. Then you add context. At the same time, our expenditure increased by 11% due to higher shipping and compliance costs. Now, you translate the numbers into meaning. In other words, even though revenue improved, expenditures rose faster. That places the unit in the red for the quarter. And the bottom line is that we need to control expenditure growth to return in the black next quarter. We recommend delaying non-essential purchases for 30 days, renegotiating 2 high-cost vendor contracts, and adjusting the shipping plan so we protect margins while maintaining service levels. That is executive communication, data, meaning, and a clear next step. Now, 2 idioms that appear often in finance and executive briefings. The first is in the red and in the black. Historically, losses were written in red ink and profits in black. If your unit is in the red, expenses exceed revenue and you are operating at a loss. If your unit is in the black, revenue exceeds expenses and you are operating at a profit. Let's do one more example so you can hear these terms again in context. For this example, I'll hand it to one of my digital colleagues.
Hello, you can call me Anja, a digital avatar colleague in Professor Stephen Lind's learning team. I'll walk you through a brief example. Imagine you are briefing leadership on a quarterly update. You might say, "This quarter, our revenue increased by 8%. Then you add context immediately. At the same time, our expenditure increased by 11% due to higher shipping and compliance costs. Now translate the numbers into meaning. In other words, even though revenue improved, expenditures rose faster. That places the unit in the red for the quarter. Now deliver the executive takeaway. The bottom line is that we need to control expenditure growth to return in the black next quarter. Finally, give a decision-ready recommendation. We recommend delaying non-essential purchases for 30 days, renegotiating 2 high-cost vendor contracts, and reviewing the shipping plan so we protect margins while maintaining service levels. That is executive communication, data, meaning, and a clear next step.
To conclude, financial data is the universal language of the suit register. It demonstrates organizational health and strategic direction to stakeholders. This is how you build executive fluency. Looking ahead, we move into negotiations and persuasive communication. Thank you for your time today. I look forward to our next session.